Welcome to CMS Forex News. My name is Nick Nassad. Today is Thursday, March 6th. Yesterday, the Reserve Bank of New Zealand held rates steady at 8.25%, which is one of the highest rates among developed nations. Though the outlook for the economy's growth has deteriorated somewhat, higher labor costs, additional fiscal stimulus, and high inflation expectations will keep the bank from lowering rates anytime soon. The Bank of England held rates steady at 5.25%, after lowering rates 25 basis points in February. The UK economy is facing signs of slowdown, and its housing sector is experiencing weakness as a result of higher credit costs and falling prices. However, concerns over near-term inflation pressures and, more important, longer-term inflation expectations were the overriding factors in the Monetary Policy Committee's decision. The pound-dollar pair was up following the announcement, and it broke above $2 for the first time in 2 months. The pair was up close to 200 pips today, and after hitting yesterday at 1.9720, it has climbed almost 400 pips. The European Central Bank held rates steady as well today, leaving them at 4%. In his press conference, ECB President Trichet said that maintaining price stability over the medium term is the Governing Council's prime objective. He did not give much indication that news of slower growth was going to force the bank into lowering rates. This news boosted the euro. Following the hawkish statement from Trichet, the euro-dollar pair continued to climb to new record territory. It gained around 100 pips for the session, hitting a new high at 1.5373. The number of Americans filing first-time claims for unemployment benefits fell by 24,000 to a 6-week low, beating expectations of a smaller drop. Industries suffering layoffs such as mortgage lenders, construction crews, and automakers were balanced by better hiring at export-driven firms. Tomorrow, the monthly non-farm payroll figures will be closely watched in order to gauge employment levels for February. If job growth is negative, then consumers may be more inclined to cut back on their spending. If the jobs data is stronger than expected, it may give the US dollar a chance to reverse some of its recent losses, which may have put the dollar at overextended levels. Pending home sales recorded a flat reading in January, surprising forecasts. With the housing recession causing many of the problems in the U.S. economy, several months of flat or improving readings may signal a bottom. However, as foreclosures continue to remain high, today's data needs to be collaborated with future releases. The dollar sank against the yen throughout the session, dropping close to 150 pips. U.S. stocks fell sharply. The Dow Jones lost 214 points, and the S&P and Nasdaq closed at the lowest level since 2006. This had a negative effect on the pair as increasing risk aversion caused investors to pull out of carry trade. Risk aversion might have played a role in the Aussie's lack of steam against the greenback, which fell against most other currencies. This week, trade data showed the strength of the Aussie has deteriorated the current account and trade balance. Today, it fell 130 pips against the US dollar in New York trading. Tomorrow, the US will post non-farm employment change data, one of the month's most important indicators. Canada will also reveal its employment situation. And that's it for today. Thank you for joining us here at CMSFX.com, and have a good evening.